This episode is brought to you by Cashflow Collective, helping Aussie business owners bring clarity, consistency and confidence to their business finances. With expert guidance and a supportive community behind you, you don't have to figure it all out alone. Head to the show notes to find out more. The information shared in this podcast is general in nature and is intended for educational purposes only. It does not take into account your personal circumstances and should not be relied upon as financial or tax advice. For advice specific to your situation, please speak with a qualified professional. Welcome to Aussie Bookkeeping Basics, the podcast that helps Australian small business owners understand their numbers without the jargon. Welcome back to the next episode of the Aussie Bookkeeping Basics podcast. Today we are talking GST and BAS, and we're going to take the fear out of GST and BAS and make it simple without the stress. So let's dive right in. So, in essence, GST, if you're a GST registered business, GST is not your money, right? You're holding it for the ATO. You are a tax collector, quite literally. Yeah, I'm a tax collector. So are you. It does flow through your incoming expenses. However, it is not your money. And this is one big thing that often trips business owners up, is thinking that GST is actually their money. No, it is not. You are merely collecting it from the consumer or another business. You are collecting it to pass it on to the ATO. So remember, tax collector. GST registered as tax collector, right? in a way to summarise it. So when talking about BAS, so business activity statements, that is just reporting and paying the GST to the ATO. So it's not the ATO sending you a bill or, trying to add extra administrative tasks onto you or to add more expenses to your business. No, it's just simply recording, reporting, and paying the GST. Becomes a little bit more predictable when you understand what's going on. When you're doing your business activity statement, in very plain functional terms, you add up all of the GST that you have received or collected, as they say, all of the GST that you have collected from clients, and then you add up all of the GST you've paid on your expenses or paid to your suppliers. Then you say the GST you've collected, and then take away or minus the GST you've paid on suppliers or expenses to suppliers, and then that equals what GST you need to forward onto the ATO. So I'm going to repeat that again just so that we can get our heads around it a little bit. BAS, business activity statements, are simply adding up the GST you have collected from your sales, adding up the GST you have paid on supplies or expenses, and comparing the two. So then you do GST collected, take away, GST paid, equals what's payable to the ATO. So by understanding that GST is actually not your money and you're holding it for the ATO, if you put away or put aside into a different account, it's not likely to be spent, or not easy to be spent, more to the point. If you can put away that GST on all of the GST applicable income, if you put that into a separate bank account, then you are going to have more than enough to put aside, ready to pay your BAS at BAS time, which is often quarterly. Can be done monthly, can be done annually, but generally speaking, most people do it quarterly. So what I suggest doing to make GST and BAS simple is each week or each month, doesn't really matter the frequency as long as it's regular, right? The regularity, the actual doing of it is more important than the time frame. Could be every fortnight, could be every 5 weeks, whatever. Pick a time period and stick to it, basically. I want you to run a report of all of the income you have received. So I want you to go, okay, look at my bank balance, right? for the month of April. Add up payment from this person, payment from that person, payment from that person, payment from that person. All of the GST included in those comes to $150, say, for example, right? Yeah, pulling out numbers to make it easy to understand. So add up all of those and work out what GST was paid on those. So $150. Take that $150 out of your transaction account and put it away in a GST account. Now, for the savvy business owners out there, which I believe you are, because look, you're smart enough to be here, savvy business owners will have a second business bank account. Now, I've touched on this in another episode, and I'll probably touch on it again because it's, again, a really simple thing you can do that makes running a business easier, is to have a minimum of 2 bank accounts for your business. You have your transaction account, which is where all of the money flows in and out of, and that's just a normal business transaction account. And if you're a sole trader, it can even just be a bank account that's just in your name. Then have a separate bank account, and this one, it's really kind of cool if you make it a high interest account. Reason being, you are a tax collector, and as a tax collector, while you are still holding on to that money for the ATO before you pass it on to the ATO, you might as well be earning the 3 cents interest on, however much, right? So open 2 bank accounts for your business, a transaction account and a high interest earning one. Each month, each week, each fortnight, pick a frequency, calculate the GST that you've collected from your clients, and transfer it from that transaction account into your GST account. And do that regularly. If you do that regularly, you will have more than enough set aside in that GST account to at least pay the GST, or at least, take a big chunk out of it, right? Particularly if you've got PAYG and other tax obligations, but I'm thinking purely GST, right? That will prevent bill shock when you get to your BAS and avoid that shock of, oh my goodness, where am I going to pull that $500 out from, right? Also has a massive impact on the stress levels. It reduces the fear and confusion and helps you to be able to know exactly what money is yours and help you to be able to make informed financial decisions from actual data. So, if GST and BAS have felt overwhelming, know that you are not alone. This is exactly the kind of thing that I break down into manageable pieces inside my membership. Come check it out. It's Cashflow Collective. We talk about this kind of stuff in much more detail, and I can run you through the how-tos of these calculations. So remember, GST is not your money. BAS is simply a calculation of how much you've collected versus how much you've paid, and then paying the difference to the ATO. Come chat to me at Deb at aussiebookkeepingbasics.com.au if you want to have a bit of a chat about how to make these calculations, which reports to pull and that kind of stuff, and know that you are not alone. I'm right here, and we're doing this together without the stress. See you next time. Thanks so much for spending this time with me. If you'd like to keep learning together, please hit follow and stay connected through the Aussie Bookkeeping Basics podcast. I'll see you in the next episode.